I want to jump right in and help answer one of the most common questions that we get when we are talking to our customers who sign up for a Pulse account. And that is, okay, I get it. I need to track my cash flow, but how do I get started? How do I see what Pulse does for me in action? And I'll be honest, thinking about the cash flow of your business is hard, regardless of the software, and it is can be very challenging and a lot of work to set up. Pulse makes it as easy as possible, and I'm going to show you the way that I use Pulse to get started. So without further ado, I'm just going to share my screen with a fresh new Pulse account, and I'm going to take you through the beginning stages of setting up Pulse. When you sign up for Pulse, this is the very first page that you'll see. And there's not much to it. It's got a very helpful video that's about 8 minutes if you want to set aside 8 minutes and watch it. It even prompts you to start out by adding your starting cash on hand. We're going to skip that because I think it feels more rewarding to start seeing money flowing back and forth, and then we'll add our starting amount later. So when I get going with Pulse, the first thing I like to do that makes me feel the best is I like to go up here to this cash flow tab and add income. So what I'm going to do is I'm going to go ahead and hide this page, and it'll take me into an empty table. This is the table we're going to fill out, and you fill it out by adding income and expenses, or you can, do it up here like I showed you. You can also add income and expenses here. So lots of ways you can do it. But all we did is we got rid of the welcome screen, and now we're acquainting ourselves with the main view in Pulse, your cash flow view. Now, we've got really helpful tips throughout, but since I'm going to walk you through it today, you could go read the blog post on this, but I'm just going to go ahead and hide that. And I'm familiar with Pulse, and I'm going to be your guide. So the very first thing is to just kind of take a survey of where things are at. So this is the main thing that you're going to interact with, adding income and expenses. We've got month, week, and list view. We'll get into that later, but like I said, you want to see money flowing. On the right, we'll talk about all this stuff later. Let's ignore it for now, and let's just add some income. So again, helpful text as you get used to using Pulse. You can read that all you want. But adding income, let's say that you have a business like mine, a web design agency, and you have landed a project that's supposed to start in the middle of July with a deposit and last about 3 months. So, we could just name that new website project, for example, and give it a category. Now, in a web design business, you might have 3 categories of projects or income. You might have project income like this. You could also have, retainer income, and so you could create retainer. Now, what we're doing is we're creating the categories for you as you type them, but you could also maybe have web hosting as a category of income, and maybe you have hourly support, right? So I'm creating these in line. It's very quick and easy. They're all saving, but this is a project. So we will pick the project category. And if you've got account numbers that you want to make that match with, we can show you how to set that up later. But this is project income. And let's say that the project is a nice size project that's $45,000. You're going to get a $15,000 deposit in the middle of July. And you expect a $15,000 milestone payment in the middle of August. And then let's say that at the end of August, you expect the balance due. So this isn't quite a 3-month project, like I said, but you'll know when you're going to get paid. And you can just add income. Now, we're done. We've added $45,000 of money coming your way, starting July 15th, August 15th, and August 30th. Now, you can add an expense. You can do anything you want to from here because you're done with this. But what I'm going to do is I'm going to click over to the reports and show you what Pulse does. This is the magic here. Starting in July, you made $15,000, and in August, you made $30,000 because that's when the payments were due. Not when you send the invoice, but when the payments are due. And so this blue line you can see is your cash on hand, which starts at 0. And then, at the beginning of August, you get $15,000. And at the beginning of September, you've got $45,000. But that's not really how business works because you have expenses. So, you can track expenses as well against that. So again, we just always get used to going back to the cash flow tab to add income or expenses. So let's add some more income and then we'll fill in some expenses. Let's say you've got a retainer for support services. You just type that in, put it under retainer, and you can say, let's say it's $5,000 a month, and that work's going to start on September 1st, and it's going to be a monthly retainer, and it's going to end 18 months later. Let's just say 12 months later. So August 1st, 2021. And you can just put a note for yourself describing what it is and then save that. You could also add a description up here, but and we'll go back up here again for our dopamine hit to see our business making money. And so now we've got some revenue coming in, but we don't have any expenses yet. And let's say we have another line of business for, web hosting contracts. And we can just put that under hosting. And let's say you've got currently $3,000 a month in web hosting fees, but that every month you probably get another $300 a month in web hosting contracts because you land about a new hosting account per month, and it's $300. So this is a rough estimate of hosting revenue, and we'll actually call it a forecast rather than an estimate. You could add that as an income item that repeats and grows. And again, like if you wanted to forecast 2% growth as opposed to $300 a month, you could do that. And that's one of the really powerful things, especially if you have software subscription businesses like I do, to take a look at what happens there. Now, you notice that each of these months I get another $300 in revenue. Now it's it's a nice stable base of revenue that you can count on, and your project revenue, happens in these big spikes like this if you're an agency business. But let's go add some expenses. Now, there are a lot of ways to do this, and for our purposes today, we're not gonna get really granular with your expenses. Let's just say that you have rent, office rent, so you could just put office rents, or you could bundle together your office and your utilities and your internet all under just a line item for office, and you create an expense category. You notice that we don't have any categories created for expenses like we did for income, because income categories and expense categories are different. So, maybe we call this just facility. And oops, I typoed that, but I can go fix that. So actually I'll go over here to settings, and just type right here to fix it and save it. And I'm going to go back to the expense and I'm going to type in office again, and I'll pick facility. And let's say that my office costs with, utilities and internet and everything, $4,200 a month. And I pay that monthly on about the 5th. Okay. That's it. And you could forecast if, for example, your rent goes up every year. You could do something like this. Let's say it goes up by about 10%. So that would be, let's be 4620. So let's say you looked at the contract and you know that every year it's going to go up, some amount. And you would end this on anytime before July 5th is fine, 2021. And end that on 2022. And let's say then after that, you're out of your lease and you can renegotiate. Ta-da. So now we'll go back to our reports and we see that we are beginning to build a forecast of our cash flow, right? You can, again, add some more expenses for, you could just do payroll and call this, just call it employee comp and create a category called payroll. However you want to organize this, like if you have account numbers in, for example, QuickBooks or whatever, if you want to do something like that, you could, but we'll just call it payroll. And let's say, your monthly payroll, you pay twice a month. So you pay on the 1st and the 15th. But that's not actually when the cash comes out because your payroll service doesn't pull it on the 1st and 15th, even though that's when your employees get paid. So you may actually want to say that 3 days before the end of the month. So let's say on about the 28th and about the 12th, something like that. Now for us, we would do May 28th and July 12th. So this is going to be, let's say your payroll is roughly, I don't know, $18,500, includes benefits, whatever. And then you will put 18.5 here, and you are beginning to build your cash flow expenses. Now, you're going to repeat this monthly, and you're going to repeat this monthly because you've got a weird schedule with the 1st and the 15th. But if you did a weekly payroll, you could repeat it weekly. We've got all the flexibility you need to construct your payroll. Now, notice that what I've done a couple of times now is I've put multiple lines inside of an expense, and that's a good way to group things and make them make logical sense. And we'll go back to our reports and we begin that, oh no, now we're losing money, so we obviously need more web projects. So you would go back into your income and you would actually punch in all of the, the receivables that you have outstanding, the, the projects that you have in your sales pipeline. If you're in the retail business, you would punch in expenses would be for inventory, but you don't worry about like a balance sheet. You're just worried about cash flow here. So whenever you buy inventory, it's money out and your daily sales is money in. And so that's how you do this. Now, this is in a pretty ugly state because it shows a business that's losing money. But this is where it gets to be really fun because, and this is where you can have the most fun, and that is by adding in the income to try and see how much you have to sell, what sort of cash you have to have it coming in to support your rent and payroll. Now, of course, we can also go, we realize that when we start a business, we don't really start with $0 in the bank. So we can go to the settings, and we're going to talk about another concept. It's called your financial accounts. So we've talked about categories here, and you would build these out to match your chart of accounts. And you know, so you could spend a little bit of time doing that for your income and expense categories. Let's look at financial accounts, because I know there's a question in the chat about putting money into the business, and this is actually a good time to talk about that. The financial accounts here, I'm going to hide the help text. Obviously, you can read all up on the blog posts, and just make that go away. Now, financial accounts are sort of like available cash. You could think of them as bank accounts. You could also think of them as perhaps a line of credit. What I'm going to think about this for right now, this primary account that we've been using, is this is my operating account, right? So I'll just name an operating account, and I am in the United States, so I can go ahead and choose USD for currency. Now we've got these currencies, and we've got all sorts of other currencies that you can pick from, including like Bitcoin. And these values and exchange rates are updated on a daily basis. And if you've got multiple currencies, we totally support that. You can add income in Canadian dollars and you know, US dollars, and you tell us what you want to see your available cash on hand converted to, and we'll give you that number. You could also just choose no currency, which is our default. And the reason we do that is because, you know, it just assumes everything's in it, you know, it doesn't necessitate a currency. So if you operate all in one currency, you're fine to stick with non-currency, but, you know, we can demonstrate, you know, how it works if you take money in different currencies. Your starting amount here is easy to edit. You just click the little edit button that I showed you there. And let's say that this business had $125,000 USD in the bank, you know, in this pretend, you know, when we started date. And I can go ahead and even give a color to my operating account. So one of the things that that's going to do, again, we always check our work by going to the reports tab, is we see that the dollar amount here started at zero earlier, and now it's starting at $125,000 when our expenses and income started, when we started tracking them. Now, the wonderful thing about Pulse is we don't have to go back and completely reconcile anything in the past. We're simply just worried about like today forward. So if you're looking at your bank account balance on July 1st, which is today, you want to know what you got in the bank account. And if this matches up with this, then you're good. And if you need to make an adjustment, you could just add an income or expense item, name it adjustment, and, you know, get that number to where you want to be. That's a quick fix. And I know Calvin, who is our product manager and is on the chat here, has helped a lot of folks with that. And if there's an article or anything you want to link to, just drop that in the chat for me. But let's say to one of the questions in the chat that if I understand correctly, the question is, how would you reflect an owner putting money into the business? And I think that that's an easy thing to represent because you could very simply just go in here and type in cash injection or whatever, you know, you know, owner equity, if you wanted to call it that, and, you know, put the money into the business. But another way to do that would be to go to the financial accounts that we were looking at earlier, and you can add an account here or go manage them by clicking into edit. And we could just add an account here, right? Now, one of the things that's really common is to have like a tax savings account, which in a sole proprietorship would all belong to the owner. And we'll just go ahead and configure this, and notice that I want the operating account to be my default account, because as you enter income and expenses into Pulse, it will default to a financial account, and we're going to default to the operating account because we'll use a lot more than this tax savings account. I'll give it a color and add this account. The The thing about the question from an owner, or as I see here, VC investment, is you can create a financial account to track it at that level. So let's say it's a convertible note or something like that from venture capital. You know, you might want to track the balance of that note. And you don't necessarily want to draw it down, but you know it's available. And we'll give it purple as a color. So now we are able to, you know, just simply add income to the account by saying owner injection or whatever, and $200 in August. Let's just say the middle of the month. You could do it this way. I'm not going to save that, but you could also say, you know, whatever you want to call it, you know, equity into the business, something like that. And you would create a category for that income that's not project income, but you would also maybe pull it from that convertible note. And so you can now track the balance in that convertible note. Without going in and botching up the reports that we have, we can go ahead and let's just say that we put $20,000 in. And we'll categorize that as just, we'll create an equity category. So we know it's not project. And you could, you know, put a little note here to keep track of things. Now what happens is you go over here to the reports and you see that you got a little bump in August. So you plan on taking that, that money and putting it in there. And to track what's available on that convertible note, you start checking your work and you realize I've made a mistake. So what you want to do is go edit that entry. What should have happened is the convertible notes balance should have gone down to 230,000, and our operating account should have gone up by 30,000. So that's easy to fix. So let's just look at the convertible note and fix that. So I'm turning these accounts off and on the right-hand side. And this is a common thing, and it's and I'm glad I made this mistake because it's easy to fix, super easy to fix. So you just click on the cash flow tab and you find that equity from the VCs, and you can just edit the entry, and you can put that into operating now since this is income, and save it. But what you need to go do if you want to keep track of that convertible note is add an expense against that. And you could you know, categorize it as operating capital or something like that. If you're, the more savvy you are, the better categories you can give it. And since this is an expense against the convertible note, I'll just make a matching annotation or expense item in here. Matches to 20K equity. So just a little note to yourself. And now when you go to your reports and check your work, you'll see that the balance of that that line that you've got from the investors is now at $230,000. So you know how much cash you can get from them. And then you can also, at the same time, this is very, very handy, forecast the bump in cash, which gets you another month or so operating at this loss. So that's one way to do it. And if you were to do it with, you know, owner's equity, it could come from the outside and not be tracked, honestly. You could even, I've used a personal savings account that I track in here. You know, I just make sure that you set up your permissions and your users the right way, because we do have some very good permissions for users, so that, you know, if you don't want your personal finances exposed to your collaborators, then, you know, you handle that over here. And there are, you permissions for that. Calvin's got some great help content on the permissions that we enhanced in the not so distant past. Again, so the thing with Pulse, now that we're up and going and we've got a lot of stuff set up really quickly, is you've set up your categories, you've set up your financial accounts. We've talked about our currency conversion. If you wanted to change some of those settings, you can do that over here under currency conversions. And you could always convert to USD. And just for fun, I'll show you what happens if you take, some money in Canadian dollars, right? So let's say there's a project and it goes into operating. Sure, what am I missing here, Calvin, to change the currency? Did I mess it up? Oh, sir. Oh, okay. Yeah. Calvin's saying that the currency is only set at the financial account settings. So see, we've got really helpful support here. So we go to the account settings. Yeah, that makes sense. It's not on a transaction level that you would have different currencies. So you could have, for example, Canadian bank account, and all the money that goes in there would be Canadian dollars. And there you go. And we'll make it brown. So there. And now if you go put some money into that Canadian bank account in Canadian dollars, say it's $35,000. And it's just August 1st. It's a one-time project payment. You can just add that in, go to your reports, and it's going to convert. It's actually converting the mixed income here, which is brown. That's in Canadian dollars. It's being converted to US dollars. Notice I put in 35,000 and it's converting it to 25,715.35, and it works in the reports as well. And this table below is also just another really good view of your cash on hand that you're tracking. So that's one way to do multiple currencies. The other thing that I want to show you while we're in here is how to play with scenarios. Now, we have a really helpful way to play with scenarios. So let's say that this project was forecast to come in August, but you want to know how your business would do if you didn't take that project. And what if you didn't take that equity from the VCs? And you can see that your total cash on hand will go down much quicker. So 10,000 in November without the equity, as opposed and the Canadian project, as opposed to 56,000 in November. So these are really handy tools to use to just really quickly take a glance at different scenarios. So you could, for example, go into your employees and let's just forecast, some growth on these. You could edit this and forecast the percent growth or contraction on your payrolls and play with scenarios that way. So those check boxes are very, very helpful. And I think at this point, the wonderful thing is that this is all there is to Pulse. The rest of it is what is in your head and what you know about your business. And it's really what we believe is the most important thing, is that Pulse doesn't try to use artificial intelligence or something to predict what your cash flow is going to be. We need that to come from you, and then we give you the tool to make it as easy as possible to get that out. And once you get that out, we give it to you in these nice reports so that you can really get a clear picture of how your company's performing. And then we've also got some other features that you can explore for companies to group income and expenses together by projects if you use a lot of contractors or if you're in the construction business or anything like that. We generally call this actuals versus projections. Now, if you are a QuickBooks user, you would connect to QuickBooks Online, and I don't need to show that today, that connection flow, because it'll take a few minutes. But if you took that QuickBooks and you connected it to Pulse, we'll give you this really nice little gray
And
line.
sorry, in my case, I would have to enter it manually because we are in Italy and we have like a very specific system of contability
Okay.
and issuing invoices. So I cannot use QuickBooks. For me, it's easier to use the local softwares.
All right. Well, that's also possible. So for those who might be on QuickBooks, I'll finish this and then I'll tell you another way you can do it. So
Thank you.
if you are connected to QuickBooks, your QuickBooks connection will show you your actuals alongside the Pulse projections. So the way it works is your QuickBooks accounts for what's in the past up to today with a gray line, and then your blue Pulse line is what you projected, and you get to see your projections alongside your actuals as reported by QuickBooks. So that can be very helpful for the QuickBooks users. Another way to handle that is if you want to just have Pulse show you in the past what actually happened, you could go in to each of these transactions, and we've got customers who do that, and they edit the actual amounts that they collect and the dates that they collected on. So your projections are sort of guesses as to what's going to happen in the future, but as things happen, you would go and edit on a transaction level what actually happened. So let's say that you had you had something that you logged that was supposed to come in June 15th. You would go into and it never came in on June 15th because the customer said, we're going to pay late. We're going to pay you in July. So you would go to that June 15th item and you would edit it like this, and you would reforecast it out into the future so that that money hasn't come in yet, but you still do plan on collecting it. Or if these web hosting contracts change and you don't get a customer that month, which is a more likely scenario, you can go edit these transactions to reflect that with different lines instead. Now, that still doesn't answer the exact question you're asking. But there's a two financial account setup that we recommend for you. Okay, you have a financial account that you create called actuals, and you put in, from your bank statement, what goes into that, what's in that financial account on the bank statement. And then one of the things you can do when you go to the reports tab is you would compare your actual account right here, and you would enter, like, either on a transaction level or in a statement summary if you wanted to just do the income and expenses for the month. You could do this. So let's say you pull up the June bank statement because it's July 1st, and you would just add, let's say income for June. And if it's an actual, you don't necessarily need to categorize it, but you could go through the step and categorize it. And you put this in actuals. And let's say you actually had 67,856.43 in income. And you just book all that at the end of June, right? And then you would add expenses. for June. This is the other way to do it. And you would put 123, something like that. And that, you know, this would be from your cash, from your bank statement on that account. And then you look at your reports, and this would be your chart for actuals. And so you could track actuals very easily. I think I messed that up because I needed to make it, June, not July. Yeah, that's right. Easy to fix. So then you go to this reports tab and you have a report for your actual June income compared to your, you know, your operating account, which shows you, you know, if we were using real data, you can see how this would work. You would be able to compare your June to your actuals, or your operating account projections to your actuals. And this is actually a really nice thing to do, to be able to look back if you just, you know, take the 3 minutes a month to go pull up the statement and log your actuals, because you can go to the, for example, the settings, and you can show 24 months inside of Pulse on your cash flow view. And I can show you. So you would actually be able to, you know, change the, show the, let's just say you wanted to show the last couple of years, you know, you can look back. And run reports like this. And it would show all of your actuals. And then you can screenshot this, print it for investors. We're working on PDF exports of this right now, aren't we, Calvin? Yeah. So we're working on PDFs but we don't have a way to show them, you know, side by side. So you would need to show the actuals.
Yeah, the two lines together. Yeah.
Right. Yes, you would have to. Yeah, you would. You don't want to combine them because it's just going to add that money together.
Ignacio raised his hand.
Gomez.
Did I
yes.
miss that?
Yep. There you
Okay.
are. Jump in.
Yeah, I'm just looking at the wonderful possible features that this great product can have, because indeed it's a great product. I think it's actually it's understated. Actually, it's underused. Basically, it's underused. It requires a little bit more automation, because indeed, just personally, one of the things that I find is that it's very manual. It's sort of an art. Wonderful tool, yeah, to express your art and your projections.
We are excited to keep spreading the good word about Pulse and what it can do for businesses. And we have been really blessed to support hundreds of businesses who have started their trials during COVID-19 to try to understand what they can do to survive the recession that the pandemic has caused. So we're excited to be a tool that can support people and businesses in such a uncertain time.